Hi everyone, my name is Doug Campbell with Right Way Options. I want to thank you and welcome you back to video number 4 in the series, A Simple Method for Consistent Profits. Hey, today we're going to dig into some of the details of trade management. Now, I know before you run away screaming saying, trade management, I get it. Trade management is not the sexiest subject in the world of trading. I get it. But it is, without a doubt, one of the most important things that you have to master if you want to be consistently profitable as a trader. So sit back, relax. We're going to try to get through this quickly in about 20 minutes, and let's get into it. Okay, well, thank you everyone, and let's get into trade management here. Now, this is a subject that I know is very, very difficult for a lot of people because we don't like to hold ourselves accountable. We don't like to be critical of ourselves. That's normal and it's natural, but we have to do some of those things if we're going to get consistently profitable in the market. If you want to trade professionally, we've got to get into this subject. So we're going to dive in here and we're going to talk about a few things that I think are extremely important when it comes to the process of your trading. Okay. Now, I feel that the number one thing, and it's one of the things that's most often forgotten, is you have to start with a goal. You need to know where you want to go. There's an old saying, if you don't know where you're going, any place is okay. Well, obviously that is not the case in trading. You need to know where you're going because any place is not okay. We don't want to be going backwards. And so to move forward, we need to have a well thought out set of goals. How are we going to go from point A to point B? How are we going to get there? What is our plan of attack? And we're going to dig into that just a little bit tonight. We're going to talk about planning a trade, some of the steps that you need to plan a trade. We're going to talk about what it means to accept that trade and that plan. And then we're going to talk about trading that plan or following through with your trade plan and then managing that trade to profits. Okay, so these are some of the basic steps to get through, and we're going to dig into that. So first off, goals. What do you mean by a trading goal? Well, I usually tell people that they need to have a weekly or a monthly trading goal because we need to find out what are you trying to achieve. So I used an example here that, you have a $20,000 trading account. And I know some of you may have more, you may have less. Don't worry about that. Follow the logic here. If you have a $20,000 trading account and you would be, let's say you would just be ecstatic if you could capture a 15% gain annually on that account. So what does that mean, a 15% gain? Well, that means that what we need to achieve is $3,000 this year or in the next 12 months to make a 15% gain. Of course, not including commissions. So you break that down and it means that we need to make an average of $250 a month. Now, I know everyone's thinking $250 a month, I'm going to work all month for $250. Well, remember what we're talking about here is consistency. And if we don't start working for consistency, we're going to struggle as traders forever. So we need to get into a mindset of being consistently profitable. When I started down the path of making the transition into full-time trading, I had to go through a process where I had to accept that every month that my bills come every month. I have a certain amount, just like everyone else, that we have to cover every single month. And so I have to cover that every single month in my trading. And the only way you can do that is consistency. And how do you get to consistency? Well, it starts with a goal. It starts with a plan. How are we going to go from point A to point B? So figuring out what that goal is extremely important, and it really doesn't take that long to put that thought process together. Maybe your goal is 20%. Now, just keep it realistic, okay? And remember that there's only a handful of money managers in the world that can achieve a 20% return year over year. And even those struggle with that goal much of the time, okay? The best fund managers in the world don't achieve that on a consistent basis. So if you can get up there in those numbers, you're doing really, really well as a trader, and you have something that's going to progress you along in a nice plan. So you always want to have a goal in mind when you trade, because if you don't know what you're trying to achieve, how can you really plan a trade? See, one of the things that people often do is they overtrade their accounts. They work more for, or they're hunting all the time and working more for quantity than they are quality. We don't need a lot of quality trades. We need to be working consistently to find those quality trades and working with those quality trades, not chasing around a bunch of quantity. Okay? Don't overtrade. And one of the first methods to help you do that is having a goal, something that you're working for. And you're always going to trade with that goal in your mind. You're always going to be working toward that consistency. Okay? So beyond your monthly goal, you want to have some trade goals. Now, if you think, okay, $250 a month, how many actual trades do you need on a weekly basis to come up with $250 a month? Literally, it could be one trade can easily make that. But that's not the reality. It's not always going to work out that every trade you pull the trigger on is a winner. So we have to find a number in there that we're comfortable with. Now, I usually tell people that when you're new and you're struggling as a trader, you should strive for somewhere between 3 and 5 trades to manage at a single time. Okay? If you start getting comfortable with that, you can ease it up towards 7 and 10 if you're more and more comfortable as a trader. But we've got to build some consistency to get that confidence up so you can do that. But if you're trying to trade one trade at a time and manage it intraday and do all of that mess, you're never going to get anywhere, and you're going to struggle forever as a trader. There's no question in my mind about that, because I did it. I thought that was a way to do it. And I struggled and struggled and struggled. It's like death by 1,000 paper cuts. Don't do it. Get a plan and start working it. Now, I know there's some of you listening to me right now that are thinking, well, my count is only $5,000. He's obviously talking about someone else that's got $100,000 or $200,000 account. They need a plan. No. As a matter of fact, the smaller you are as a trader, the smaller your account size, the more you need to have a well thought out plan. See, someone with a bigger account can absorb some substantial losses and have something to trade. They can come back. But with a small account, we have to be really, really focused on our process. And you have to have that plan. Now, this may sound a little harsh, but I'm going to say it anyway. If you're not willing to do this, stop trading right now. Because all you're going to end up with is a bunch of regret and a smaller bank account as a result. You need to buckle down and you need to step up to this if you want to be consistently profitable. Okay? So, not only do you need to have a monthly plan, you need to have that set of goals. You need that trade goal that's going to move you forward. So, for example, if you're working for $250 a month, maybe if that trade moves up and you've got $50, $60 in that trade, and you're worried or you're nervous or you think the market could slip or fall or the stock is looking a little bit spooky, then take the profit. Now, we're going to talk about this in just a second, but Taking those profits consistently is hard for a lot of people to do. I often get requests from my members, should I take a profit? As if they have to ask me for permission to take money out of the market. If you're going to be consistently profitable, you have to figure out how to be consistently taking those profits. A small profit is a profit. It's moving the goalpost a little bit closer to your goal every time you do it. Okay? So you have to get used to the idea of taking those consistent profits. You never want to trade without an exit plan, ever. And I'll show you why here in just a second. First, if you don't have an exit plan, you're always going to be emotional. Okay? You need to make business decisions, and business doesn't have any room for emotion. We have to be very focused and straight up with our trades. So focus in on that, and the only way we can plan a trade is by having an exit plan. Okay? So that we can remove those emotions. We can dedicate ourselves to a trade, and then we trade the plan. Okay? And I always recommend keeping positions small. Now, what does small mean? Well, I can tell you most of the time, my total capital at risk is no more than about 3% of my account. And I know a lot of people, that may be just, what? Seriously? That small? Yes, that's small. 3% of my account is what I risk, the total position that I put into a trade. That's not what I risk. I risk much less than that. But I keep my position small and trade more often. So I have more potential occurrences for wins. And I'm always working to take those gains out of the market. Okay? So let's talk about some trade planning. Now, obviously there's a lot more detail that you can go into, but in this quick video, I wanted to go over some of the key elements, okay? So first, I've got a chart here in Shop, and I show a nice pattern here. Remember, what we're looking for is we're looking for a stock in a trend. We're looking for a stock that has enough volume to fit our criteria. We're looking for a stock that fits our trade or our account size, something that we can actually trade. We don't want to waste time trading something that, or even looking at something that we can afford to trade. Okay, so I marked this chart up here, and I just said I want to have an entry right here, and that it's hard to see, so I put it over here. The entry here at 52.01, and I would actually place an order that says if this stock crosses above here, breaks out essentially, I want to enter that trade. Remember, we use this volatility stop for our stop losses. So I'm going to place my stop loss plan at 50.24, just beneath that dot. Give that stock the ability to come all the way back and test support and bounce off of it. Okay? So I calculate that out. $1.77 a share is my risk. If I have a 100 share position, that trade obviously carries $177 risk in that trade. Now, what I do on every single position is after I figure this out, I decide, I make a decision, is that acceptable? You see, one of the major mistakes that I run into as a trading coach, people will chase a trade, jump into a position without thinking about what their risk is. The chart looks great, but they haven't figured out what they're actually risking. And then when the stock starts to pull back, they panic because it's bigger losses than they expected. They exit the trade, taking a loss just before the stock goes up. Now, I know if you've traded very long, you've done that, because I did it all the time. It's a common problem in the market. So we have to have that acceptance of that risk and know what it is to remove that emotion and prevent us from making that emotional decision. And after we do that, we need to make sure that what we're risking in this trade, that we have the potential to make more than we're risking And this trade actually has the potential to reach our goal. One of the mistakes I used to make a lot was I'd place a trade, not recognizing overhead resistance or that the stock was probably going to move up just a little bit and pull back. And so I was constantly putting myself into trades that would almost immediately pull back after I'd buy them. That's a function of buying at resistance. Okay, happens a lot, and it's something that we will talk about further on in this series. Okay, so once we do that, now here's something I use. We actually have a software product out. It's called Trader Vision. I'm not trying to sell you anything. In fact, this current version is no longer available. We're actually in the testing phase of version 2, and we've stopped selling version 1. But this is the level of detail I go into on every single trade. I'm practicing what I preach, essentially. This is probably the most important thing that made me successful as a trader, is that I settled down and I planned my trades. And we can do that because we're making those trades come to us. We can have time to do that. So you can see in this trade, it was a small position. Stock name was a UAN. And you can go back and look at these dates. I don't have the dates are in the actual trade portion of this. The dates aren't here. But go back and look at this chart. And you can see I put in that I wanted to buy the stock if it crossed above 505. Doing exactly what I said. The trade's coming to me. If it crosses up here, I want to buy it. Okay? And I planned my trade. Notice that I was only trading because this was a small stock. I didn't want to overtrade a small stock. They tend to be a lot more volatile. So I was only trading 1.53% of my overall account. Very small trade for me. Okay? So I bought 2,100 shares of this stock. Now you can see my stop loss, and this software automatically calculates out my exact risk. I know exactly what I'm risking on this trade. Now my trade goal on here was to make $600. Okay, minimum $600. So if I had to sell my entire position, okay, in this trade, if I had to sell all 2,100 shares, the stock would only have had to gone up to $5.35, and I would have made my $600 goal. Okay, but I had a nice little trend working for me. Everything was working fine. So I set target 1 right here. Target 1, I'm selling 1,000 shares. There's my goal, 600, 22.63, 12.31% gain. There's goal 2, or target 2, another $600. And target 3, another $600. Now, I don't always trade trades that have 3 targets. Sometimes I only get 1. Sometimes I get 2. Okay, it all depends on the trade. So don't get the idea that you have to have 3 targets and they have to be perfectly placed. No. What you have to do is just have a good plan to take profits consistently. And can you see that's what I'm doing? Taking profits consistently. Okay. And in this trade, once I was in the trade, I actually placed these orders to exit as soon as I entered the trade. The trade was entered, my stop loss was in, I managed my stop loss daily, but these orders to exit this trade were already in the market. I didn't even see them exit. Stock moved up, triggered me out. I was selling into strength. As the stock was going up, I was selling into strength, capturing goals, moving that marker with every trade. Okay? Moving that target closer and closer to my monthly goal. So I actually do practice this, and I do this on every single trade I trade. Okay? So this critical step of acknowledging and accepting a trade, it's so important because emotion is one of the biggest factors that we all deal with as traders. It's always cropping up. It's always causing us problems. We make poor decisions when we're focused on, or that emotion takes control of our trading. So you forget this step and you've invited emotion into your trade. So always keep in mind that trading is a business. Treat it as a business. You have to be accountable for your actions. You know, trading is basically a zero-sum game. There's one winner and one loser. So why would you ever think you could go into the market where some of the best are in the market completely naked without a plan, with no idea where you're going, no idea what you want to accomplish? You're just asking. You're asking for losses when you do that. Don't go into this market or any market, okay, without a well thought out plan. A zero-sum game is a zero-sum game. One winner, one loser. You need to be on top of your game on every single trade. Okay? So you need to be accountable for your actions and your decisions. Don't blame, someone else. Don't, oh, I'm tired. I don't feel like doing this today. That is not acceptable in trading. Okay? There are no excuses for laziness as a trader. This is a business. It's a sole proprietorship. You have to be responsible. If you aren't responsible, if you don't do these steps, if you don't follow a process, who's going to do it for you? We all have to step up if we're going to be successful in trading. This stuff is very important. Do not pass on this step. So, trading the plan. Now, it seems kind of easy once we put our plan together. We've accepted it. We've acknowledged that the risk is okay. Now we got to stick to the plan. Sometimes that is about as difficult as anything because the market's moving around. There's a bunch of emotion. You hear something in the news. Everything's fluttering around during the day, and you're just getting really nervous watching this stock. Okay? As long as it continues to trend, as long as it continues to move in the trend and stays within the plan with which you put together for that trade, unless something material changes. For example, some really bad news on the company, or the market just absolutely shifts and looks like it's ready to just really roll lower, and that will usually affect all stocks, then you may have to make a change. But unless those kind of things occur, stick with your plan. Your plan is there to protect you from you. Follow the plan. So if the goals have, if the trade's been moving up and your goal has been reached, let's say you have a goal of $100 on every trade. Well, if that stock moves up past $100 in profit and you don't take that trade off, at least do this. Move your stop loss to protect that $100. Don't let that $100 go away. Okay? Remember, we want consistency. So to be consistent, we have to consistently take profits. Everyone out there loves a home run trade. Okay? And once in a while you get them. Okay? But that home run is rare. Okay? A career in trading is built around consistent singles and double hits. You just want to get to first base, you want to get to second base. And you want to do that over and over and over again. And every once in a while, you catch that really good one, and it's a home run. But we don't plan for those. We plan for consistency. Okay? And the home runs happen as a result. One of the cardinal rules that you never want to break is never let a winning trade turn into a losing one. One of the things I used to do all the time is I'd be up $200-300 in a trade. I'd see that number $300 and I'd look at something else and do a couple other things and look back, and now it's at $285. Well, I had 300 stuck in my head. I wanted 300. And I would literally watch that $300 bleed to even negative. And I know if you've traded very long, you've all done that, because that 300 number is stuck in your head. The reason that happens is because you're not following a goal. If your trade goal is X amount of dollars and that trade is actually positive toward your goal, you need to be taking that money out. You don't want to let that roll negative. Okay, so never let a winning trade go negative. Okay, so manage. What does manage mean? Well, it's a lot of different aspects. First, you have to manage yourself and your emotion. You do that with a trade plan, you do that with a good set of goals. You have to maintain discipline. Discipline to stick to your plan. Discipline to follow through. Discipline to do what you say you're going to do. Accountability. Every business is accountable. Okay? If you're a sole proprietor business, you're accountable for everything. You have to step up to that accountability, accept it, and follow through. Okay? No one's going to do it for you. You have to step up and do it yourself. Be accountable. If you don't know how to use your trading software, be accountable. Learn it. If you don't know how to set up a trading plan, be accountable. Find out. Okay? These are things that you have to do if you want to be successful in trading. You want to manage your trade plan. You want to cut loose those bad trades and just be ruthless about it. You know, one of the things I used to do is I'd finally get a trade going up and I would take that profit way too early, and then I'd let that trade that was going down just keep going and going and going, hoping I'd get it back. Never do that. If the trade is going against you, if you were wrong, admit you were wrong quickly. Be ruthless, cut it loose. Remember, any loss that you take, if you're being accountable and following your goal, just made it harder for you to reach your goal at the end of the month. Cut it loose. There's always a trade going in your direction. Look for those. Don't waste your time with those that are failing. Okay? Manage your goals. Okay? We want to sell stocks into strength when they're moving up. And I know that sounds ridiculous. It sounds hard, and it's really hard to do. It's hard to learn. Okay? When the stock is moving up, the greed kicks in and we want more, right? We all want more. You give me $500, I want $1,000. You give me $1,000, I want $1,500. That's just the way it is. It's the nature of people. Okay? But we have to have that solid plan that says, look, this is getting me to my monthly goal. I either have to lock it in or take it. Okay? Now, one of the rules we use in Right Way Options, Hit and Run Candlesticks, one of the things we do is Friday. Friday is profit day. Okay? If we're in trades that are profitable, we're heading into a weekend, there's a lot of unknowns that happen over the weekend. If we've got good profits, it's time to start taking some of those profits, moving that goalpost toward your goal. Okay? So you always want to be working to clear those decks and take those profits when appropriate. And we use Friday for that. As we roll up to Friday, if we're still holding good long positions or good short positions that hold profits in them, we want to start trimming those out. We want to start putting that money in the bank where they can't take it away from us, okay? Working to make our goals. And then the last and final thing here is you need to have a process of evaluation. Every trade that you've traded, and particularly your losers, you need to go back and evaluate. You need to find out if you made a mistake or if it was just the market or something like that. You may think that something is working for you, a particular indicator or this or whatever is working for you, but you're proving to yourself over and over that it's not working. Now, Einstein said that if you continue to do the same thing over and over expecting a different result, that's insanity. And how do you know that you're doing that unless you review? If you go back on those trades and you review them and find out what's working for you and what's not. Now, I can tell you the Trader Vision software that we use actually crunches those numbers for us. It actually tells us what's working better and what's not. And I'll let you know as the series goes along when we finally release version 2. I'll let you know when it's out there so you can take a look at it. I'm not trying to sell it to you or anything, but just know that there is help out there if you struggle with that, okay? So review all of those closed positions. It's not fun. It's not easy. You know, nobody wants to be accountable. I get that. But if you want to improve as a trader, you have to find those mistakes and correct them as quickly as possible. And that requires an evaluation and a review. Okay? So here's that same trade in shop. And this was the entry point right here. That's the entry day. So you could look at this as, hey, I'm going to take profits. I'm going to take profits. I'm going to take profits as the stock is moving up. This would have been a tremendous trade. And by the way, Shop has produced trade after trade like this over the last 4 or 5 months. Just settles in, rests for a while, then moves on up. Settles in, rests for a while, moves on up. Just take a look at the chart. It's phenomenal what it's done. Okay, and it's not the only one in the market that has done that. So you can see by doing this, imagine yourself taking half of the position off right here, locking in your goal. It's in your account. Now, can you relax a little bit and let this trade continue to work for a bigger profit? Absolutely. It takes the pressure off of the trade. So working for consistent profits is one of those methods that helps you manage your emotion in the position. Okay. Now, I don't know if you guys have seen this, and I just tossed this in just as a whatever, but we have a phone app out, and these videos, this video, my morning videos, Rick's trade ideas, and everything is available free on this app. The app is free, and we provide all this information free. Now, I'm going to give you a link in the description of this video. There'll be a link for the walkthrough video. Okay, recommend you use it. Right here, there's a little icon. There's 3 little bars right here. That's actually a menu icon. You click on that menu icon. You don't have to be a member. Okay. But you click on that menu icon, it opens up a sidebar with all the different choices and things that you can do. You can watch videos right on here, you get trade ideas and all kinds of stuff, and it's free. So if you haven't seen this yet, go to your Apple Store or Android Store. It'll work on both devices. Look up HRC Trading. HRC Trading. And you can download that app for free, and feel free to use it as long as you want. Share it with your friends. There's a lot of great information on there. Okay. So next time, we're going to get into a focus on patterns, a little more detail on those patterns, what we're looking for when we enter a trade, what constitutes a really good quality trend. So we're going to dig into that on that next video. So I hope everyone enjoyed this. Hope you got a lot out of it. Obviously, I didn't get it done in 20 minutes, but everyone take care, and I will talk to you very soon.